Okay, time for our fiscal focus segment, as always brought to you by Info Choice, your choice of information on Australian consumer finance. Now, on the back of our great chat last week with Mark Chapman from H&R Block, we thought we'd keep up the tax talk for another week because we love tax, or rather we love saving on tax, because as the late Kerry Packer famously told a parliamentary committee back in 1991, if anybody in this country doesn't minimise their tax, they want their head read. As a government, I can tell you, you're not spending it that well that we should be paying extra. Well, someone who certainly knows a thing or two about that is Kerry Packer's former accountant and author of the book Tax Secrets of the Rich. That's Allan Mason, who I'm pleased to say joins us now. G'day, Allan. Welcome to the Savings Tip Jar.
Thank you, Dom. And it was interesting at that time, I did work for Kerry at the time of that Senate inquiry, and the word wasn't giving more, it was donating more.
Oh, donating.
Donating
Sorry, I
more tax.
misquoted.
There we go.
Kerry.
Straight from the horse's mouth. You're there in the furnace, I'm sure. We'll get to that a bit later, Allan. But my first question for you is, I think when you first published the book, the tax rates hadn't been changed. Now, for this upcoming financial year, there's been an addition to the book about the new tax rates. So just give us a bit of an explanation about of what bracket creep is and why the tax cuts do not exactly return this.
Exactly, and people don't realise this. You have an increase in prices of everything you buy, so then you get an increase in wages, and instead of paying 15 cents or 30 cents in the dollar, you move up to 45 cents in the dollar. So as your wages go up, you move up into different brackets and you pay more tax. And the tax cuts do not cover this at all. I did some modelling on it, and in fact, you've on an income of a bit over $100,000, you're $1,500 a year worse off, not better off. There's no tax cut here. It's a decrease. Why? Because spending and the cost of living has increased, and what a dollar buys today is not what it bought 3 years ago.
I guess, Allan, the solution to that problem, bracket creep, would be simply indexing the tax thresholds to inflation. But I don't suspect any government is going to sort of go near that in the future, given it's so lucrative for them. But can you foresee a future where that might be the case?
Well, the bottom line is, Dom, that the tax threshold, the zero tax threshold, is $18,200. It's been that for 15 years. For 15 years, the zero tax threshold, the amount on which you do not pay tax on, has not moved. A person could not live on $18,200. In fact, the tax-free threshold should be around $50,000 a year. It should be pushed up. And so what does the government do? They bring the tax brackets down a little bit and tell you that you're getting a tax cut. You're not getting a tax cut. It's smoke and mirrors.
That's a great line there. It seems like we're told that it's a favour to us, but really it isn't. And what you mentioned there, Allan, about the tax-free threshold being $50,000, personally, I kind of support that notion. I always thought around $40,000 would be a good tax-free threshold, and then introduce a lower flat rate after that. But on that topic more broadly, do you reckon there's too much onus in Australia on the income tax payer, and there should be other forms of tax that need to be looked at? And what would your ideal scenario be with the tax brackets?
Well, given that I work for people that have high income, I probably would be going against my clients if I suggested anything different. But the bottom line is that you're right about the tax threshold, and a living wage should be tax-free. So if you can only live on $1,000 a week with rent and housekeeping and other costs, then that should be tax-free. And any surplus above that should be taxed at higher rates. And it's crazy to think that an average worker is on a bit over $100,000 a year, loses about $20,000 to $30,000 in tax. How can you live on that? And it causes people to take all sorts of risks. But my view is that, unfortunately, we have a very high emphasis on tax paying on individuals. something like 68% of tax revenue comes from individuals. That's wrong. It should be more from bigger companies who can afford it. And remember, large companies pass on a franking credit. So when they pay tax and they pay a dividend to their shareholder, they pass the tax on to that shareholder. So it's not such a burden from that point of view. So I think our system's a bit wrong. It's that way because it's palatable, because people who donate money to elections and to government and to various areas don't want it to be any different. And maybe that's not a nice way to look at it. But the bottom line is that a salary and wage earner can do very, very little to reduce their tax. There's very little they can do. You've got an income at a level, and unless you can be creative, and I have this conversation all the time, unless you can be creative with what you're doing on how you earn your income, unless you can move something into an area that's tax-free, you're going to be caught and you're going to be hit with it. And if you're just receiving a salary each week of $1,000, $2,000 a week, there's nothing you can do.
So, Allan, as mentioned at the top, you were the accountant of Kerry Packer right at that height of his wealth, and during that time when he did sort of appear before that committee with that famous quote. Can you just sort of give us a rough general insight into what that was like handling his tax affairs? And the name of your book obviously is Tax Secrets of the Rich. So if you can tell us any sort of little hacks that Kerry Packer had for reducing his tax.
Well, there's a millionaire mindset that applies to people like that, and I work with quite a few high net worth people. And the millionaire mindset that passes on is that they do not accept the status quo. So, for instance, Kerry would say, what can we do about this? That's not acceptable. And many, many times through my career, I've had to pull a rabbit out of the hat. And on our website, I've done that. I've listed out some of the case studies where I've done that and come up with solutions. So, for instance, I had a client at one time had a $3 million profit. It's about March of the financial year. Didn't want to pay $1 million in tax. What can we do? And I thought about it. I scratched my head and I thought about it. And it took me about a month and I came up with a solution. He paid $268,000 on $3 million profit. And you think, well, how can that be done? I can't tell you. I can't tell you. But there are case studies in my book on how I've done that in various situations. So the bottom line is one of planning. The bottom line is one of looking at ways to restructure a transaction. People often say, the more money I make, the more tax I pay. That's wrong. It's a myth. I can tell you there's probably about 10 different ways that a business person or an individual who can maybe restructure their affairs. I was going to use the word manipulate, but let's use the word restructure. It's a bit more palatable. So, for instance, you get a 50% CGT discount on investment properties. So 50% of your gain is not taxable. Sole and principal residence, whatever you make on that, not taxable. You have small business rollover tests that allow you to not pay tax on 50% of your gain, then your active asset, another 50%, then roll over into super, another 50%. We're now down to 12.5% of the profit subject to tax. So it's not correct that the more money I make, the more tax I pay. The more money you make, the more tax you pay means you've got a lazy account. It means you haven't thought about it in advance. It means you haven't acted to try and restructure your affairs in a way that will be tax effective for you. So, as I say, it's a myth, and you need to dispel that myth and you need to be proactive. If you're not proactive, you'll be a puppet on the tax officer's string. You will just pay and be stabbed or whatever it might be. You'll have no ability to do anything. So act before June 30. Think about what you're doing. And as I said, a millionaire mindset with Kerry and with any other of the entrepreneurs I work with, and I've got people, some worth 70 million, 100 million in profit, in net assets. What do? They challenge the status quo. They find solutions. And if there's no solution, they go, okay, we'll just pay it, whatever. But generally, they try to find solutions. So plan and restructure and rethink and think about how you're going to manage the situation. I'll give you another very, very simple example. You've got 3 or 4 rental properties and you've sold one and you've made a capital gain. And you go, oh, okay, I made a capital gain, that's nice. So the myth would be the more money I make, the more tax I pay. So now I've made a capital gain of 500,000, I'm going to pay 200,000 in tax. Hang on, no, I don't want to do that. Entrepreneur would say no. So what would you do? You've got a couple other rental properties. You go, well, let's prepay my interest on my other rental properties and offset that capital gain that I've just made on that other property. That's not rocket science. That's not that hard.
From what you mentioned just there, I'm sure some people's eyes are rolling in the back of their head going, oh man, this sounds too hard. And there's some research out there that suggests that 20% of taxpayers underclaim their deductions because of poor record keeping. Do you think that if, say, theoretically there was no capital gains tax like in New Zealand, and there was a flat rate, a lower flat rate of 15 to 20%, there would be less or fewer people doing all these things to reduce their tax, and it would just be simpler and less red tape for everyone, which would ease efficiencies? What are your thoughts there?
It's hard because the government needs to raise a certain level of income. So how do they do it? At the moment in Australia, they do it by people being tardy and paying more tax than they should and allowing loopholes to occur. So if we had a flat rate tax, let's say, take a simple example, GST of 30%, no income tax, GST 30%. I mean, that sounds crazy, but just a thought. So that might raise the 500, 600 billion the government needs each year. Will that get the right people? Will it target the right people? Probably not. I think our system, there's no perfect system. Any system you have, people are going to find ways to reduce. You mentioned earlier about 20% of the population overpay their tax. Do you know why they do? Because they're tardy. They're poor record keeping. They don't think ahead. They maybe they're not bookkeeping literate. Maybe it's not taught in schools well enough that people will think about it. They whinge and complain about paying tax, but they don't do anything about it. And then, so what do? Do you help them or not? I don't know. I mean, the fortune favours the bold. That's the bottom line. And we all know Kerry, and I can talk about Kerry because he's dead, but we all know that he won't come back and bite me, but we all know fortune favours the bold. So when you've done something and you take some bold steps, let's take a case last week where there was a reshuffle that was done in a clothing company, clothing manufacturer. The tax office assessed on a particular thing they did, a Div 7A, too complicated, $50 million transaction. They taxed the people pretty heavily on it. They took them to court, tax office lost. Tax department lost. So you think the tax office knows all the time? They do not. I've been in front of the tax office many times, and certainly in Kerry we had quite a large case where the tax office lost. So do not think that the tax office is always going to be on your side. They're not. They're there to try to help raise money for the government to do the right thing for the economy. And as I said, you need to be proactive in how you manage your personal affairs.
Now, Allan, obviously you've got the book out, and I'm sure there's plenty of listeners or those watching on YouTube that there it is. There's the book, Tax Secrets of the Rich, updated for 2024. So those that are interested or considering buying the book, can you just, without giving away too many of the secrets, just give us a general idea of what they can expect to learn from the book?
The main thing is one about planning. I've said that many times. Case studies. In the book, I've covered every angle that could apply to a person in business. So from a worker, employee, keeping work from home expenses, all of your costs, all the things you've incurred, make sure you keep records, make sure you don't underclaim. Through to a person in business, through to trusts. People think about trusts, should I be using a trust to buy property, or should I do it through a company? Or should I put more money in super? I've even got a case study where I actually did this, where we started a business in a super fund. Why? Because the super fund was in pension mode, tax-free. All the profits were tax-free. Remember what I said about the myth about tax earlier? So, there are ways that things can be done, and there are clever ways that they can be done. So in my book, I've listed out many, many case studies, many times where I have pulled a rabbit out of the hat. And I've done it maybe 10 or 15 times in my career. In one case, saved 3 million, another case, 1 million, another case, 500,000, another case, 9.8. So you'd be surprised what goes on out in the real world. I'm sorry, I know you're in the publishing world, but you'll be surprised what goes on in the business world. And the average person does not see it. I do, because I'm at the coalface, but the average person doesn't see it. So in my book, I've tried to dispel some of those secrets, some of those myths, and try to pass on those things that people can use to help build their own wealth without a massive tax burden.
There we go. As they say, Allan, inflation is taxation by stealth. And if you haven't sold listeners on the book, I'm sure you've sold them on your services and how you were able to aid someone like Kerry Packer with his stature in Australian business history to do better on his tax returns, I'm sure. So thanks for your time, Allan Mason, and thanks for joining us on the Savings Tip Jar podcast.
Anytime. Thank you.
Thanks, Allan.